First of all, congratulations on the recovery of Greek GDP. X number of years ago, in the gloom of this prime minister or that, no one believed it would happen. How did Greek GDP recover?
Thank you very much, Tom, and it's a great pleasure to be back on the show. Actually, it's even more extraordinary at the moment. We have most global economic data going south, and Greece, the economic
What's the
sentiment
driver?
is going
Tourism?
up. The new government. The new government is coming into place after years of uncertainty, and people know that there's predictability, there's going to be political stability, there's going to be lower taxes, more reforms, and a government that's focused on reforms.
Ages ago, I had a finance minister when Greece was flat on its back. I believe I was at the Greek consulate in New York, say to me, our goal is to get Greeks to bring their money abroad back to Greece. Is there evidence of that?
Deposits are increasing. We're also going to be making a lot more reforms. We're going to be also instituting a non-dom program that will try to incentivize to bring wealthy foreigners to relocate to Greece. But ultimately, it's all about confidence and governance. We believe that you need to put the right people at the right place to create the right institutional framework. And then trust returns.
One Ben Bernanke, you studied with the chairman at Princeton. One Ben Bernanke's life work is to say this is what went wrong in the U.S. Depression. It was we needed integrity within the financial system. How are Greek banks not like the beleaguered banks of that upstart country to the north, Germany? How are the Greek banks doing better than what we see in Italy and in Germany?
So we've been through a very long recession. The new government now has a minister responsible only for the financial sector. We believe very much working with our European partners. You know, the previous government used to regularly attack the central bank governor of Greece. We believe in mutual cooperation and to bring things forward.
How will the European Commission advisor, good morning from London, how will they actually approve the APS scheme?
I'm sorry, how? We're currently in consultations with DG.com and with SSM. We want to move forward with the APS scheme, as you mentioned. That's based on the Italian scheme, to introduce a sovereign guarantee to the senior tranche of the bonds to allow a rapid deceleration of NPEs. Of course, we have all the tools in our toolkit, including the Bank of Greece plan, and we are going to work very aggressively to move banks forward.
Right, so if this is approved, you know, what's your estimate of the amount of NPEs that could be cut from the bank's balance sheets?
We're still in negotiations, so I'm not able to disclose that, but it's likely to be at the higher end of estimates.
The higher end of what we're hearing out there?
Correct.
Okay. Mr. Patelis, give me a sense of how difficult it will be for your country to grow given the trade concerns and the downturn that we're seeing in the world economy.
So as I mentioned before, Greece economic sentiment hit the highest level since 2007. That's the same month that European sentiment continued declining. In fact, consumer sentiment in Greece is now the highest since 2001. So this is clearly a different mindset. It's a new government. It's focused on reforms. We want to attract foreign investment. We want to double Greece's growth rate to 4%. And we're ready to do the reforms to achieve that. But also, as I mentioned before, we're ready to put in place the right governance and the right people to attract this foreign investment.
You bring a holistic view, you bring a quantitative view, and you've also enjoyed making a conviction call on the market and being wrong. That's pretty rare for a guy in your position. With that said, and with how you know the market can be brutal, what do you need from Mario Draghi today? Greece is a periphery, Greece is a success story, but what do you need from Draghi today so we don't screw up this recovery?
Ourselves, we are fortunate enough to still be in a position where we can benefit from the ongoing decline in yields. Greek yields have gone down from 4.5% to 1.5%.
What's your optimum euro?
I'm sorry?
What's your optimum euro? I got to get you in trouble.
The exchange rate?
Alex, please. What's your optimum euro?
We as a government are ready to operate under any framework of monetary policy. The exchange rate is determined by the markets. We do not believe in running an economic policy that's based on devaluation. We believe in reforms. It's as simple as that.
God, he answered that. Francine, Alex answered that so well. He never would have done that at Merrill Lynch. He would have given us a single point estimate to 3 decimals.
I should probably,
okay.
Yeah, please.
Now, Mr. Patelis, I mean, what does Greece need from Germany, right? Do you need fiscal stimulus in the rest of the Eurozone to try and help your country out?
We're not in the business of asking for favors or asking for help. We are now equal partners with the rest of the European Union. I want to highlight that 2 days ago, the Greek commissioner, Mr. Margaritis Chinas, was actually nominated to become vice president of the European Commission. This is an example of how far things have gone. Greece is no longer the pariah. Actually, the new government achieved a 40% a vote at the elections, which is so rare amongst European countries.
This is an important question. Charles Weiplatz and the other economists that have thought about the future of Europe. How does Europe clear the debris of this great recession? On a Hayekian basis, Alex Patelis, how does Europe move on? Do they just eliminate the debt, write it down to zero?
No, we always believe in the spirit of cooperation, and I think in our case, and probably in your case, we need to do the reforms to make the economy grow faster, and that will allow the debt to become more sustainable.
Alex Patelis, thank you so much. Of course, Chief Economic Advisor to the Prime Minister of Greece.